Hey everyone, welcome back to Corporate Decoder. Today, Rowe O.H.A. Select Private Credit Fund just filed an 8K revealing their April distributions and net asset value, and I am seeing a clear picture of their capital situation. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is actively raising funds and paying distributions, but let's dive into the numbers to see what that really means. Alright, so we are looking at a filing from Rowe O.H.A. Select Private Credit Fund. This is a Form 8K, which is basically a report of major events that shareholders should know about. The report is dated the 24th of April 2026, so it is super fresh information. The first key piece of information here is about their distributions for April. Distributions are basically payments the company makes to its shareholders from its earnings. They declared regular distributions for each class of their common shares outstanding. Now, these shares have different classes like Class I, Class S, and Class D. What is interesting here is how the fees affect the net amount shareholders actually receive. For Class I common shares, the gross distribution was $0.2000 per S-share, and there were no servicing or distribution fees deducted. So the net distribution was also $0.2000. With Class S common shares, the gross distribution was also $0.2000, but there was a shareholder servicing and distribution fee of $0.0185 per S-share. This means the net distribution for Class S shareholders was $0.1815. So shareholders in Class S received a little less after fees. Similarly, Class D common shares had a gross distribution of $0.2000 with a servicing and distribution fee of $0.0054. The net distribution for Class D was $0.1946. So Class D holders got a bit more back than Class S holders, but still less than Class I holders who paid no fees. This difference in fees is something to definitely keep an eye on because it impacts how much money actually makes it into investors' pockets. These distributions will be paid out around May 29th to shareholders who own shares by the end of April. The company also has a plan that lets shareholders automatically reinvest these cash distributions back into more shares, which can be a good way to grow your investment over time. Moving on, we have information about the company's net asset value, or NAV. This tells us the value of the company's assets minus its liabilities per S-share. As of the 31st of March, the NAV per S-share for all classes was $26.15. This means for every share you owned, the underlying value of the company's assets was worth $26.15. The total net asset value for the whole company was a massive $1,638.4 million, which is over $1.6 billion. The company's investment portfolio, which is what they actually own and invest in, was valued at $2,983.7 million, so almost $3 billion. Then they have debt, which is money they owe, totaling $1,468.6 million. This gives them a debt-to-equity ratio of about 0.90 times. A ratio close to 1 means the company has roughly as much debt as it has equity. This isn't necessarily bad, especially for a credit fund, but it means they are using a good amount of borrowed money to invest. It is important to note that this debt level is normal for investment funds like this. Now let's talk about how the company is growing. They are currently in the middle of offering to sell up to $2.5 billion worth of their shares. This is how they raise more money to invest. They are selling shares on a continuous basis, meaning they are always open to new investors. The table shows how many shares they've issued and the total money they've raised from these sales up to the 1st of April. For Class I shares, they issued 48,946,021 shares and raised $1,338.4 million. That is over $1.3 billion just from Class I alone. Class S shares saw 4,507,573 shares issued, bringing in $123.6 million. And Class D shares had 7,170,424 shares issued, raising $193.0 million. In total, they are raising a significant amount of capital, which suggests investor confidence in their investment strategy. They plan to continue selling shares monthly. Lastly, we have the exhibits, which are just supporting documents for the filing. Exhibit 104 is simply the cover page data in a format that computers can read easily. Nothing exciting there. Then we have the signature section where the company officially signs off on the report. It is signed by Amaka Dyke, the Chief Financial Officer, on the 28th of April 2026. So, what is the story here? Rowe O.H.A. Select Private Credit Fund is actively managing its investments, paying out distributions to shareholders, and importantly, continuing to raise substantial capital. The difference in net distributions between share classes highlights how fees can impact investor returns, and the significant capital being raised shows continued investor interest. The debt to equity ratio is something to monitor but appears in line with industry norms for these types of funds. The risk I am watching is how effectively they deploy this raised capital to generate returns that consistently exceed fees and market benchmarks. What I am actually looking for is continued growth in both NAV and distributions over the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.